Hello once again, I'm Burry. Thank you for joining me. It is Monday, December 16th, and I told you if I saw anything after the last video, I would provide a quick update. So I don't want to be in the business of making a lot of videos. I want my videos to have a quite powerful impact and meaning. If you remember from 2022, my videos were pure gold, if you will, for content. And so I wanted to provide you with an update quickly. So let's jump to the macro model and then where I'm seeing a slight alteration. As always, if you want to donate to my work, you can use the QR codes here or the link in the description down below for PayPal. Okay, so basically I said in the last video that we could see a crash into Christmas with this 1, 2, 3. You can kind of see the green line is falling. Could be right around Christmas, right? So I did say that. So I slept on that. I thought about it more. And then I studied the models this morning with the pop in markets that we're seeing today. And so that will lead me to my next slide. So the first drop could very well be into the 19th, right? I showed you the gold wave yesterday on the 5-minute time frame, having a drop into the 19th. Well, there's also like a 1, 2, 3, 4 count on the gold wave as well going into the 23rd. So and then with today's market pop, we're seeing a 1, 2 established in the purple wave. And usually what happens is when you have a 25 point separation in the horizontals, when you create a type of trajectory within that lane, within that 25 point lane, so that the 1, 2 there you see in the purple wave, the lower horizontal is -75 and the next one is -50 above it. When you create 2 points within one lane, the trajectory usually creates a crash into the future. So I'm expecting that markets hit their crash low around the 23rd is the best I can come up with. Again, I hate to make another video. I don't like to do it. But if I'm going to be as I guess aligning of my models, I don't really know how to put it in better English at the moment. I'm seeking to align my models, essentially the macro and the micro. And the macro hasn't broken, and it's going to take probably 3 or 4 days for the macro model to fully exhaust. So markets, like it could be like a 2018 type scenario, remember, where markets crashed into Christmas. I think even the day after Christmas, and that was the bottom. So I don't know what events could take place around Christmas. I don't know if the Fed purposefully is trying to keep the Christmas spirit alive longer by not crashing the markets from Thanksgiving into Christmas, or into the Fed date, I should say, but rather after the Fed date for whatever reason. I'm not sure. Obviously, we know that the Fed has a massive amount of control, and they can leverage their assets to pretty much control markets however they wish, within the patterns and behaviors of markets themselves. But in my feeling, they should have really started selling off equities and things of that nature, their assets, right after Thanksgiving, if the Fed was going to soften markets into their bottom into the Fed date. But we haven't seen that. So from what I get, what I'm trying to get the two models to speak about or speak to is where the major low is, and you need the macro model, the previous graph, to break down below the center line. And if the current daily model is up at, let's say, 75, 80, positive 80 above the center line, it's going to take 3 or 4 or 5 days to reverse and go all the way back down the graph into the negative territory. So at this point, you really do need a little more time for markets to exhaust. So I hate to produce a video right after my last one, but I feel a little more comfortable if markets at least go down lower sideways into Christmas, I think that would break the model. It would exhaust. That would be enough to get the model back into neutral, so to speak, so that it can start going back up. But I would assume that this could create pressure into the 23rd on the downside. Again, we have yet to see it. I don't know, but if I make the prediction before anything happens, then obviously, hopefully, my hard work will pay off. Anyways, quick video today. Sorry about the update, but wanted to give it to you. Thank you so much. Bye.
So hopefully you've enjoyed my show today. Warning, this is all forecast use only. Come here. You want to read this for me? What does that say? Forecast?
Forecast.
Use?
Use only.
Only. Right. And what's this say?
Warning.
Disclaimer.
Disclaimer. I am not
A licensed investment professional. That's Latin. So say caveat emptor. Seek professional advice prior to investing. Investing bears risk
of
financial
loss.
Very good. And so basically this is saying if you ever try to invest in stocks or anything else, you could lose money. Warning, warning, warning. And all my graphs are subject to change. And not all the results are not always the same. Yeah. Thank you for reading for me.
You're welcome.
And that's it for today. I'm B.R. Schultz. Until next time, take care.